Today, I want to talk about how the shorts are currently in big trouble. I want to explain how this is likely going to either end in A, forced liquidations next week, or B, the hedgies pumping the market higher to generate additional liquidity. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Charles Payne tweeted saying Wall Street blew it big time, and now many will have to swallow their pride and cover their short positions, or repeat the same message of market doom and hopes to sway more unsuspecting investors to head for the hills. He attached this photo which shows that short sellers lose as NVDA jumps. It says NVIDIA's rally to record highs leaves short bets with $8.1 billion in losses. Obviously, $8.1 billion in losses is a ton of money. That's between 3 and 4 times the size of AMC's entire market capitalization. And of that, over $4 billion in losses has come in just the last week since May 24th. So I want to explain the 3 options these shorts currently have. Either A, they're forced to close out of their short positions, B, they try and pump the market higher to generate additional liquidity, or C, they try and crush the market with everything in it, including NVIDIA. You may be saying, Tom, who possibly is stupid enough to have a net short position right now on NVIDIA? Well, as a prime example, we've got Citadel advisors. Citadel currently has a net put position on NVIDIA, or a net short position, with over 1 million more shares shorted than they do have long. In the last few days alone, Citadel have lost a few $100 million just by shorting NVIDIA. So they either A, try and push the market higher in stocks like Apple and Microsoft, where they have more call options than they do put options. B, they try and crush the market with everything in it, so their NVIDIA puts become profitable, especially as Citadel on the whole has a larger put position on the S&P 500 than they do call position. Or C, if Citadel is stuck with nowhere to go and they end up breaching those margin requirements, they will be forced to close out of those shorts. And that's why, as Charles said, they'll either swallow their pride and close out of their short positions, or try and convince more investors to run for the hills, crashing the market. And this is all happening at a very interesting time when hedge funds recorded the biggest outflows in years in the year to April, as investors pulled $11.5 billion over the last 12 months to April. So not only is Citadel losing hundreds of millions of dollars on their NVIDIA put position, but they're also losing hundreds of millions, if not billions of dollars in withdrawals. That's obviously exactly why Citadel tried to cap their withdrawals and tried to limit those withdrawals to only 6.25% per quarter. Because they're effectively stuck between a rock and a hard place of losses, between losing cash in NVIDIA puts and also losing cash in withdrawals. And obviously it's likely not just Citadel advisors that have a larger short position on NVIDIA than they do long position. There's likely many of other hedge funds in the exact same boat. And that's why Suspended POS has tweeted saying there's a reason why meme stocks are being suppressed to high levels, and blue chip stocks like Apple and Microsoft are pumping to crazy, ridiculous all-time highs, while the S&P 500 still hasn't pumped and hasn't really moved yet. I saw a tweet that said if you remove the 7 largest tech stocks, aka NVIDIA, Tesla, Apple, Microsoft, Amazon, and a few others, the wider S&P 500 has only increased by 1% so far this year. Basically, the S&P 500 is flat on the year, but these blue chip tech stocks have been pumped to try and generate additional liquidity. These stocks have obviously been pumped to generate additional liquidity to try and ensure that these hedge funds have enough cash to meet their margin requirements and don't have to end up being margin called and don't have to close out their short positions. But obviously when stocks like NVIDIA are ripping to all-time highs, which some hedge funds actually have a larger short position on, these hedge funds are still losing tons of money. Especially if NVIDIA continues increasing over the next few days, especially as it's the last few days of this month, it may end up causing these hedge funds to suffer forced margin calls. Either that, or as Charles Payne says, these shorts have to repeat the same message of market doom to try and crash the stock market a little further. Personally, I love seeing Charles Payne talk about anything short seller related, especially when Wall Street has blown it big time. Hopefully Charles Payne continues to draw more and more attention to these shorts that are not just shorting genuine American companies, but are also doing so illegally. Guys, if you haven't already, please be sure to sign up to Moomoo, the sponsor of today's video, using the link in the description below. You can currently get up to 15 free shares, which on its own is worth tons and tons of money. It's also very easy to use as a platform, it's very clear and concise, and Moomoo also has entirely commission-free trading. Now, I've also seen a few comments on my videos asking why Adam Aaron doesn't acknowledge synthetic shorts and why he specifically says that he hasn't seen any evidence of them. I do believe that Adam Aaron does believe in synthetic shorts, and that's why he didn't wear any pants to his interview with Trey. He wanted to show people that he does believe without legally admitting so on Twitter. And you may be saying, but Tom, every other CEO can call out these synthetic shares, no problem. Why is Adam Aaron not allowed to say that these synthetics exist? And why exactly would just Adam Aaron end up being sued? While it does confuse me as to why Adam Aaron doesn't speak about synthetic shares in more detail, you also have to remember exactly what's happened to these companies where their CEOs admit to synthetic shorting. Stocks like GNUS or Genius Brands, MMAT or Metamaterials, BLNK or Blink Charging, and FNGR or Finger Motion have all crashed by up to 99% so far this year. FNGR is down from $10 to below $2 per share. BLNK is down from $64 to below $7 per share. GNUS down from $31 to below $3 per share, and Metamaterials down from $6.50 to below 30 cents per share. While I do obviously hope that all of these companies squeeze, especially because if any of these companies squeeze, it will also cause the GameStop and AMC squeezes, you do have to admit that when a CEO admits to synthetic shorting or talks about synthetic shorting, his company is targeted even more. Maybe that's why Adam Aaron doesn't talk about these synthetic shares, because he doesn't want his company to be targeted even more heavily by these short sellers. As I said, I do believe that Adam Aaron does believe in synthetic shorting, and that's why he didn't wear his pants to that interview with Trey. He obviously just chooses not to talk about it on Twitter or in the public eye, I guess to draw less attention to AMC, aka less short seller attention to AMC. Now, I've also seen what I think is my favourite data glitch so far in the GameStop stock. You can see today that Yahoo was reporting the GameStop stock had fallen by over $42 trillion per share. That must mean that according to Yahoo, GameStop was trading at one point yesterday for $43 trillion per share, but I guess has since fallen since then. I personally think that $42 trillion per share would be an excellent cash out opportunity for the AMC or GameStop squeeze. Still to this day, I think it's so funny how these data glitches only seem to happen to GameStop and to AMC, never to stocks like NVDA, Apple, Amazon, or any others. Clearly it's because these data providers simply don't know what the correct data for either AMC or for GameStop is. They don't know how many real or fake shares actually exist, and they don't really know what the trading price should be. All these different data providers and different data sources likely all have different figures together that are being reported separately, and whoever's presenting the data can't figure out which data source to choose. And that's why you end up having so many human input errors that are causing these data glitches left, right, and centre. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.